I wanted to walk you through a real example. Actually, in this case, will be two real examples of two trades. And just when I was creating this course, there were actually a couple of demand zones which I marked on the charts, and this one was one of them here. And so basically, I was waiting for the price to go below this lower boundary, which I will draw for you, and then potentially form a bear trap. This is exactly what happened, guys, and also a price action confirmation. So all those factors aligns in line with the trading strategy, and then we had some price going below this level, then a bullish engulfing pattern, and then the price actually went up to the next minor supply area. So how does this look on a lower time frame? So if we switch from the daily to the 4-hour chart and come back to basically the beginning of this move, we're gonna see that the price initially had a false breakout here. Then you can see the way price behaves is first there was this couple of rejections which already are strong enough to tell you that the market participants are not willing to pay a lower price than what they're paying at this level. Then we had a couple more candles, then an inside bar here, and as you can see, the price actually never went below the this low point here, which if let's say some of the first traders that might have entered off the 4-hour chart before getting a confirmation from the daily chart, just based purely on the price going below the lower boundary of this demand zone, then they might have been the ones that are reaping the highest rewards, but still they're also taking the highest risk because the price might actually break below this level if the daily chart doesn't confirm this this demand zone. So what happened next? There was a couple of other candlestick patterns, this 3 candle bullish engulfing formation here, which was followed by this huge green candle, and apparently lots of market participants confirming the price action. So next day the price opened with a bullish gap, and you can see there was a very tight range. Then at this point we have this green candle engulfing the red candle, which actually gave the next second signal to a lot of buyers, which was confirmed by the next candle breaking up this upper range of the demand zone. And then the next candle was a very bullish green candle, which already at this stage would signal to a lot of the market participants that we are having this signal confirmed. And then what lots of a lot of the market participants that actually missed the price action initially, they'll be looking for a small retracement to our closest support level, and this happens here. So we have another bullish engulfing pattern, which actually is giving you another indication. But since the price is very close to the next supply level, what I'll be looking for is pretty much another signal to go short. And this is not very late, since you can see the price goes pretty high here, and then you have an inside bar. Again, you have a minor supply area here marked by this red range. Then you had the price breaking up higher, one green candle, then a second red candle, which is an inside bar, and at this level here you should be already looking to actually go short. So I will mark this candle, and if you go to the 4-hour chart, you can see where I've marked it here with the blue line. Then the first indication that comes after that is actually have first this pin bar, then you had an inside bar, then you have a bearish engulfing, very small bearish engulfing pattern here. Then you have a couple of bullish rejections, then another bullish rejection, then bearish engulfing. So pretty much all of the candlesticks are giving you bearish indication. So either one of those, even if you entered here, you would have made a profit. So you can see that you might be one of the last participants to enter after after this bull trap, but then still these are about 250 pips probably, and in terms of risk to reward ratio, if let's say I use again this tool, you enter on based solely on this bearish engulfing pattern, and currently the price is at the level of 1.300, then you're already your risk to reward ratio would be 4.1 to 4.61, which is an extremely high risk to reward ratio for especially such a short period of time. And if you manage to actually, I'll go back to the 4-hour chart, take any one of those earlier signals which happened here. So if let's say you manage to take this bearish engulfing pattern here, let me just move this slightly to the left so you can see better, guys, and close all these ads. They're quite annoying. I really apologize for that. Okay, so let's move this here. Let's say if you entered on this bearish engulfing candlestick and you placed your stop loss just above this high, you should be also considering the highs in the region, not just the previous high. So let's say you have a high here, but then a couple of candles earlier you have another high which is higher than this one. I would certainly suggest that you consider this as your place to put your stop loss just above this level, and then the price is currently at this level, so it gives you about 5.6 risk to return ratio if you are that early in the trade. But apparently trading doesn't go in a straight line, and you might not be one of the first ones to get this trading signal unless you're glued to the screens. But another actually good point of this trading strategy, guys, is that we're looking at only daily and 4-hour charts, and sometimes actually going to the 1-hour chart just for extra confirmation and to see more detailed analysis of the price action. But even if you use the 4-hour chart and the daily only, then you won't need to be glued to the screens, as opposed to let's say you were a day trader and you were trading based on the 5-minute chart. And actually lots of the people that I talked to initially, because I made an initial release of this course to just a selected group of traders, and which was about a year ago, and all of them were actually quite excited because they quite a few of them tested the course on the lower time frames and they confirmed it works. But I wouldn't suggest you to do that unless you have significant amount of experience and you have been trading on a demo account for quite some time using this trading strategy. So that's why I would suggest you to stick to the 1-day and 4-hour charts, as I'm explaining in this course, and possibly don't even look at anything below 4 hours.